This is Sovereign Debt, a podcast on greening the global economy and debt sustainability. I'm your host, Jill Doshi. Hello, everyone. We've had an exciting week in Paris at the Summit for the New Global Financing Pact. And there was a lot of talk about sustainable finance, obviously, credit enhancements, and in particular, the debt for nature swaps. Everyone, it seemed, was buzzing and talking about Ecuador. So I thought it was wise, if we hurry up and get someone on the podcast sooner rather than later who could walk us through it and hopefully answer some questions as well as maybe some of the criticisms that have been raised. So today's guest is Joan Oriol Prats Cabrera. And for those who have not yet met him, Joan is the lead financial specialist of the Inter-American Development Bank and the point person on Ecuador. But also importantly, he was instrumental in the Barbados transaction, which is another interesting sovereign transaction that brought climate and nature into the refinancing. But first, Joan, I just want to thank you so much for joining us today on the podcast.
Thank you. Thank you very much, Jill, for having me. And thank you for putting this podcast together in these important topics that we are all interested in. Thank you very much.
Thank you. So before we get into the weeds of the actual transaction, could you tell us just a bit more about your role at IADB and how you've been working with all of your member countries to kind of prepare the terrain that allows them to take advantage of these market innovations around sustainable finance? I know you've been doing a lot of work with your member countries.
Sure. The IADB and myself as the lead financial specialist on sovereign guarantees and debt management, we've been providing continuous support to several aspects that are crucial for this type of transactions. On one hand, we have provided financial and technical support to strengthen public debt management offices all around the region, generating applied knowledge and spaces of exchanging ideas. We have a forum that is the LAC Debt Management Group that gathers the 26 debt managers in the region and help us a lot to raise important issues on debt sustainability, new sovereign climate debt management instruments. And this is a very important upstream work to then be able to provide for this type of transactions, right?
I mean, your member countries, I would say in general, have been much more active and more deeply involved in the international capital markets, as well as having deeper domestic markets.
We have one of the most sophisticated DMOs all around the world. You've been interviewing some of them.
Exactly.
Patricio Sepúlveda in Chile, Herman, and obviously Otávio in Brazil. We have many very sophisticated debt management offices, and that helps a lot to put the upstream and the underpinnings that this type of transactions require. However, especially working with guarantees requires also to work with emerging and not so sophisticated countries, because the most sophisticated countries are the ones that have market access. And normally guarantees are for a spectrum of countries that are below investment grade or to have more difficulties to get market access and require guarantees to improve their terms of conditions of financing. So combining technical assistance with guarantees, it's a thing that needs to happen in order to conduct this type of transactions.
No, I see what you're saying. So in a sense, kind of the weaker countries or the countries without the strong market access are the ones in fact that are needing the financial support or the kind of the credit enhancements, and therefore also needing probably a lot more of the technical assistance.
Correct. That's the case. When we started with supporting the social bond in Ecuador back in 2020 with a guarantee of 300 million. It was the first ever sovereign social bond. It was very important to help as well on the technical side, all the work that needs to be done in terms of building the framework, the reporting systems, approaching the investors, and all that type of work needs to be combined with the financial sophistication on how to use a guarantee to support the debt issuance. That it's also very important.
And I might be slightly jumping ahead of myself, but some of those guarantees and what you're referencing just now are coming directly from the IADB.
Yeah, that is correct. We have a sovereign guarantee product that it's basically a product directed to provide market access and improve terms and conditions for our member countries. Obviously, there are more countries that are more suitable for this type of product. This is not for every single country, but it helps a lot to the credit enhancement that is required for some of the type of transactions that we are talking about, especially the debt for nature swaps.
Right. I know everyone listening to this is probably anxious to say, okay, but what about Ecuador? Let's turn to the recent debt for nature swap done there, which most everyone now knows is of date the largest debt for nature swap done. And it was to benefit the Galapagos Island Reserve. Can you just walk us through the basics of it, just to kick us off?
Sure. This is an operation that basically starts with the commitment of the government of Ecuador to increase its marine reserve for the Galapagos in a new 60,000 square kilometers area that is called the Hermandad Marine Reserve.
Mm-hmm.
So in order to finance for that will always require a substantial amount of long-term financing for the next 40 years. We supported a debt conversion that consisted in a market operation through which the government of Ecuador bought back at an average discount price of 60%, 1.65 billion of outstanding debt.
Mm-hmm.
That was financed with a 656 million loan that was provided by GPS Blue, that is a special purpose vehicle. And that loan was insured by a political risk insurance provided by Development Finance Corporation. That allowed for that loan to be at a very, very attractive prices given Ecuador credit standing. Mm-hmm. This loan was further enhanced by an IADB guarantee of 85 million that complemented the PRI of 656 million from the Development Finance Corporation. This provided overall savings of 1.45 billion compared to the original debt service that the government had. On these savings, 323 million will be transferred to the Galapagos Life Fund, that is a private conservation fund established for this operation. And it will be providing funds for the next 18.5 years to finance conservation activities and capitalize an endowment that will contribute to the long-term finance required, right?
Right. So just to unpack this a little bit, and it is a similar structure that we saw in Belize. And so hopefully it's becoming a little bit more familiar to the market. It's the same idea that you're using the US DFC political risk insurance to use as the credit enhancement to, as you say, that loan. And that was for the debt service reserve account, was the participation of IADB, if I had it correct?
Yeah, that's correct. In comparison with Belize, we have several efficiencies. One is that there is no need for the reserve account, so no money from the government needs to be parked there, which is expensive for the government, mainly because it avoids using that money to buy back more debt and obtain more savings, which are substantial, as I was just mentioning. Right. The other is that The PRI, it's not covering interest payments, which that's also very important for the efficiency of the overall deal, right? Given that these are very important. So both things make the transaction even more efficient than in the case of Belize. But I think as we move forward, we need to work on the efficiencies and get the most out of the buck that we are putting in this type of transactions.
No, absolutely. So I have one question, and then I do want to get into the concerns about debt for nature swaps. But before we get into that, I do have one question because it really strikes me when I see the structure of this deal, particularly the Ecuador deal compared to the Belize deal, that, as you say, these efficiencies that you were able to kind of look at and kind of try to streamline it a little bit. One of the things that you've mentioned here that IADB was able to do was to come in and to help with this debt service reserve account, with this additional credit enhancement. And it strikes me that this is the kind of the crux of the matter, and that we need more players that can step in to play these different roles, right, to provide these credit enhancements. So how did you prepare yourselves in order to be able to do that? Or how do you think about this? And if possible, do you have any advice to the other MDBs about how they can follow in your footsteps?
Thank you for that question. And it's true that we are leading the work on sovereign guarantees for sustainable development outcomes. We started in 2020. I was saying the Ecuador social bond that kind of set the stage for this type of transactions to happen. And we learned a lot from that experience, but also we did a lot of upstream work helping the debt management offices and building the required credibility and policy dialogue for us to have a say in the structuring of this type of transactions. And the other couple of things that I would mention is, first, I think it was interesting for us to use the policy-based instrument, which was an instrument that allowed the IDB to combine a policy reform matrix, which basically created the reforms and organizational measures that are required to conduct a debt for nature swap in terms of the policy commitments of the government regarding conservation, the establishment of the trust fund, having in place sound debt management strategies, and so on. So that helped a lot, and that's what a policy program does. And we combine that with a guarantee, which is the mechanism for us to provide the credit enhancement along with other partners. And here, the dialogue with other partners, it's especially important. We did it with the Nature Conservancy in the case of Barbados. We did it in the case of Ecuador with the Development Finance Corporation. And a final point would be the required coordination within the multilateral institution. To put this type of projects in place, we need to merge financing and non-financing people. And that is done through a lot of coordination. So we coordinate a lot with the climate change department within the bank, but also within the bank with risk management department, the treasury department, and the legal department. All these departments require a different way to do things, and change management abilities needs to be taken into consideration for these functional areas and start doing things differently.
That's so interesting, because that really echoes what is happening on the sovereign side, in the sense of we're constantly referencing the interministerial coordination that's needed for these types of transactions. And that's kind of what you're describing needs to be happening within the bank. Just different divisions need to be kind of coordinating in a new way.
Exactly. This is a very team-oriented type of work, cross-functionally. It leads to having a lot of co-leaders within each of these divisions. So a lot of dialogue needs to take place, and a clear definition of functions and what new things need to happen in each of these departments for us to be able to develop this kind of strategies. No, for example, our legal department has been doing massive amount of work of having new contractual structures to have in place for us to provide a guarantee linked to this type of climate results, right? Which is a game changer, I think, also for the state of debt markets internationally, right? There are new debt contracts that we are writing as we speak, and these are important innovations that are taking place in international law.
Absolutely. So turning a little bit slightly now, and I don't want to say the criticism of this deal, and that's just my shorthand for it. It's more just kind of, I think some of the concerns or some of the kind of hesitations of the various market players around these, whether we want to call them debt for nature swaps or debt conversions or just these sustainable debt transactions. And I don't mean to put you on the spot as the person to kind of defend the whole transaction, but I just to get your reactions of this. I have a list of them, but and it's ranging from the length of these transactions. I mean, what you're just describing, even that has to happen in the Inter-American Development Bank or within the governments that are borrowing, there's a huge amount of coordination that needs to be done. And obviously in political environments, that takes a lot of time. And so a lot of debt managers looking at these transactions kind of think, oh, well, this is just too heavy of a lift. It takes too long. And also it might cost too much. What would you say in response to some of these concerns?
Well, my first reaction is that these transactions are difficult in terms of technicalities. They are not easy to put together. Basically, a structured finance, it's meeting debt capital markets for sustainability outcomes, which is a difficult combination and requires a lot of coordination, not only within MDBs. You can see it also within investment banks or even with major NGOs. It is a high degree of coordination and complex for everybody. At the same time, the results they bring are quite substantial. And as we speak, we are streamlining the processes. So the contracts won't need to be invented again. We have fairly good templates on how our guarantee can talk to different credit enhancement products. So that will streamline a little bit the process and help to simplify all these. The major point I want to raise here regarding timing and accountability is that I think the involvement of MDBs is going to be very instrumental. Since IADB or any MDB gets involved, and in these two particular transactions, Barbados and Ecuador, the lead time was fairly okay. It was 1.5 years since we were involved.
Mm-hmm.
And part of the difficulty are because in these transactions, the main client of the government, it is the IDB. Normally, there is a difficulty in having a private sector having a conversation or negotiating in an international arena, right? An international sphere of debt, especially regarding debt, with a government. So to smooth out that conversation, and there are many details here, but the basic concept is that having an MDB, which the government is also part of the MDB, by the way, but we are an honest broker between parties, we can provide and facilitate that dialogue. As I mentioned, right, since we were involved, it took us 1.5 years to get the deals done, which is not bad for this complexity of this type of deals. Given this and that we are creating a new way to do things, I think we can shorten the lead time in the future.
I was just going to say, it's always harder to do things the first few times, but as you kind of create templates and those connections are made between, as you were just describing, your legal department, your risk department, et cetera, then the next time around, hopefully it goes more smoothly, and hopefully it actually even leads to, and I don't know if this is the way you're thinking, but leads to some sort of programmatic approach.
Exactly. That is what we expect to happen, with the only comment that this is a structured finance at the end of the day. So it's not like only debt capital markets where, you have an offering memorandum that is basically the same and you keep issuing. No, you're structuring here. And structuring in this case means linking the financing to particular commitments in terms of biodiversity, climate, etc. And that needs to be built.
No, and what was interesting in the very first question that we were talking when we just first kicked off on this talk about Ecuador, you said it began with the commitment of the government on the Galapagos, on the conservation. And I like that, because that's something I try to tell clients and everyone who will listen to me, is that that's actually the base. It's not a financial transaction at its heart. At its heart it is really the activity, whether that's around climate, nature, health, whatever. That's the base.
Exactly. That's why the leadership in the country regarding these issues, it is so important.
Right.
So it starts with a vision, and then we as technical people will find the structure that best provides financing for that sustainable development outcome that needs to be financed. And the idea is blending together all the potential co-guarantors and partners that want to support the efforts of the country. That's the general idea. That's correct. In the way, there are many things, right? Because you don't get to that milestone or to that objective immediately. Sometimes you need to create a path, and that path is full of incentives. So you create a reward and penalty type of mechanism, which is the structure of the finance, which is attached to the structure of the financing.
Right. When you were also saying that in this transaction, delivered so much, can we unpack that a little bit of because again, this comes back to some of the concerns that you hear of, one, it doesn't really actually provide that much for the conservation, or two, it doesn't really actually deliver debt relief. This transaction perhaps, can silence those concerns because it is so big. And I think the cash flows are significant, but can you just address those concerns that we hear?
Yeah, no, absolutely. I mean, in terms of results, I think it's basically so clear that this transaction is bringing sustainable fisheries for the next 40 years, support for the blue economy, support for local communities. So I think that's out of the question. And it's doing so providing concrete indicators that needs to be accomplished in terms of monitoring milestones, fishing aggregator devices, etc.
So all of that accountability is kind of built into the transaction.
Correct. And if those are not met, there are penalties associated with that. And that's a very robust type of sustainable linked framework, right? Which is the general idea under this type of transactions. So these type of transactions bring the sustainable linked framework to the detail of a particular project or area that needs to be protected. If you see an SLB, normally you have like a KPI that is brought in terms of NDC to be met, or emission reductions or methane or so on, right? But here it's more on at the project level, right? You talk about protect a particular asset or.
So this is kind of more like a use of proceeds in the sense of it's very much kind of tied to specific activities versus just an indicator.
Well, you have the indicator and you have the penalty if you don't meet the indicator, but you also have a use of proceeds that it's linked to the savings. So you actually need to show, and if you don't provide for the financing, there are major commitment defaults. So it needs to be provided both things, the financing. So in the case of the Ecuador deal, it is 18 and a half years. They will need to provide 17 million on a yearly basis.
Right.
15 for a grant program and 2 million for the endowment. That's a lot of money for conservation in the long term, right? So, and that amounts to 323 million. And if you account for the increase in the endowment, there will be over 200 million more. So on the overall, you can get almost 500 million for conservation in the next 40 years, right? That's
And who governs the use of that and kind of monitors that pot of money? That's partly the government, partly the other sponsors, Pew and others, or is that civil society?
That is correct. There is the Galapagos Life Fund, that is the trust fund that is going to manage that, and that is public-private partnership. Now the presidency, it will be held by Ecuador, but there will be 6 non-governmental organizations in the board and 5 members from the government. And there are 3 founding members. One is Pew, the other is Ocean Legacy, and the other one is the government of Ecuador. And that will be managed professionally, right? There will be a director, there will be several committees, monitoring by PU and others. So it will be fairly scrutinized, I would say, and make all these very, very robust.
And then one other question I hear that I just want to kind of bounce it to you, which is, let's face it, Ecuador has had several kind of moments of distress in its past. Going forward, is this structure kind of immune from future restructurings or distress?
Well, no one can say what happens, because that will be,
a future problem.
that will be decided at the moment of a restructuring. But
okay, and I don't mean to suggest that Ecuador is heading into a restructuring, but
it's an important point. My only comment here would say that our experience so far with guaranteed instruments by IDB to sovereigns was the past restructuring Ecuador did in 2020, and Ecuador carved out the Ecuador social bond.
Right.
So that was out of the restructuring. And again, I cannot say what the authorities are going to do at the moment when an eventual restructuring happens. But what I can say is that Ecuador right now, it's very far from needing a restructuring.
Yeah. No. And that's what I mean. I don't mean to say, and I wanted to make that clear. I'm not suggesting that they are, heading into a restructuring. It's just the concern that I hear about debt for nature swaps, just in lots of different contexts with lots of different sovereigns, of what happens. So I just wanted to kind of ask you that question.
Let me add some comments here, right? The thing is the following. What I think could be something to think about is that, they might not commit to whatever they were supposed to do in terms of biodiversity protection in the context of a debt restructuring. And it's a legitimate concern, not only for Ecuador, but for many countries that are facing debt restructurings. The situation gets very, very difficult. Priorities are very urgent.
Yes.
And that's something that needs to be dealt with. But let me say one thing, and here it's important, because in this type of structures, what we also take into consideration is that if, for whatever reason, there is a natural disaster, there is a particular event, for example, a pandemic event also,
right,
happens, there must be some relief for the country.
Right.
We did that in Barbados with introducing the pandemic clause.
Exactly. That's that parametric insurance clauses that are inserted.
Correct, that provide principal relief for 2 years to avoid liquidity problems, to convert insolvency problems. And that also can be worked out for the commitments regarding biodiversity protection. What we don't want is that these transactions impede or pose a problem to the overall working of the economy of a country, which obviously should have the priority that it needs, right?
Right. No, exactly.
They can work along the way, and part of the debt management role it is to accommodate for this type of events to happen and don't have an influence on the sustainable development objectives of a country.
No, and it's an important feature that has, being discussed. And I think even in Paris, even the World Bank is embracing that and kind of going to expand their use of those sorts of insurance products.
There are different layers, right? There is the insurance and there is the postponement of payments. That is,
it's basically making the kind of DSSI sort of feature linked to the payout of those insurance or the triggering of those sorts of events.
Exactly. And we need to accommodate the type of event, how aggressive that event is being, with the type of relief that we are providing, right? Insurance gets to the low probability, high impact type of event, and for the medium probability, medium impact, and so on, we provide the postponing payment, right? Which is providing relief for 2-3 years, and that helps the country to get in its feet after this type of event happens. So it's an overall strategy that the country must have to deal with this type of events. But the good thing is that we are building it in these structures at the same time. So going back to your question, I think it makes the structure more robust to the type of events that can lead a country to have a restructuring need.
And on this question of distress, I just want to get your reaction, if I may, about the Moody's, about Ecuador. They came out and said that this was, in fact, a distressed transaction because of the significant discount that was achieved. Do you have a comment on that? Because I know that actually worried a lot of sovereigns that are looking at these sorts of transactions because they are so concerned about market access and their credit rating. That spooked a lot of people out there. So do you have a comment on that or a perspective?
Yeah, Moody's has a very particular definition of that distressed exchange that comes from the corporate world and their methodology to sovereigns. It's not straightforward. It is basically, when you go through it, it's basically reflecting that the price of the buyback was very, very low, 39 cents on the dollar.
Mm-hmm.
But there was no credit action associated with this opinion by Moody's, and neither S&P nor Fitch consider it that way, right?
Right. I mean, because when I read it very closely, it seems that it's really just a comment on the transaction itself. And if anything, you could read it as a positive, yes, you achieved a big discount. Well done.
Yeah, no, but you're very, you're very certain that we also received some comments on misinterpreting this opinion. And I think it's important to mention that credit rating agencies are also learning from these processes. And probably will have to be a bit more nuanced with communication strategies to avoid this misunderstanding, especially given the global push for a new financial architecture that we've seen the last week.
I totally agree. And I think there is a tendency in many quarters of this, as we said, kind of many faceted transactions. It draws a lot of different types of people into it. And many of those people are already kind of suspicious of the credit rating agencies to begin with. And so I found that their comment was, even when you look at it very carefully, it's probably a kind of a non-event, but it doesn't play well in certain quarters. Let's put it that way. And so I found it kind of concerning. So I totally agree. I think it would be helpful if they also kind of evolve. But maybe I can get someone from Moody's to come on the podcast and debate it with me.
That would be great if you can come with new ideas.
I'm conscious of time and I'm quickly looking over other questions. I think I might just turn to our last question, which is a little bit of a tradition where I hand it over to the guest to say the last word and to give any advice. It's usually advice to debt managers, which is maybe what you want to do, but maybe you also want to give advice to other MDBs or other market participants around these types of transactions. But I'll let you decide. You get the last word. What would you like to say, Joan?
Thank you very much. I'm a very practical person, so probably I'll try to send a message to debt managers in terms of start thinking on which organizational needs they are going to require to face the more complex debt management world that we are going to live in the next few years, right? In which traditional debt management instruments like bonds, ALM strategies, or hedges are going to bring in the sustainability angle. And two areas will be especially important, I think, to take care of investor relations, where the rationale of new investments will need to be combined with the country's overall economic agenda, and obviously considering how climate change and biodiversity fits into that agenda. And the second is, how are they going to deal with reporting and transparency? As climate tools are increasingly introduced in the sovereign debt management toolkit, major reporting will take place and increasing efforts will be needed and will require a high degree of coordination among different ministries and different stakeholders in general. All these will obviously have consequences in terms of cost, organizational structures. So also from the IADB, last message is that we are here to help and to support in this process, and we want to be part of their toolkit as well. Thank you also, Jill, for having this opportunity to address all these issues during this podcast.
No, thank you. Thank you so much, Joan, for coming and for your personal as well as your institution's leadership and all of these transactions and these processes. It's really fantastic. So thank you so much.
Oh, thank you. Thank you again.
Thanks for listening. If you enjoyed the episode, leave us a review and subscribe to the show wherever you get your podcasts.